How you doing, everybody? It's Steve Ammon. I hope everybody's safe. I hope everybody's well. I hope that you are finding some new things to do in this lockdown. And most of all, I hope that you're staying positive and healthy. So I'm making this video because I wanted to talk quickly about forbearance. I think it's an important topic because this could be something that some might want to take advantage of considering your circumstance. But I want people to know you want to consider all the potential ramifications. So, what is a forbearance? Well, forbearance is when you make an agreement to stop paying your mortgage for a certain period, but then after that period's over, you're going to recoup that, or the mortgage company is going to recoup that payment with a higher payment until you're all caught up. Okay, so this could be a potential trap for homeowners. And here's why. Well, first of all, you want to ask your lender whether or not this is going to affect your credit, okay? Because the way the lender is going to report it may vary from lender to lender. Is the lender going to report it as late or not? Because if it's late, here's how it could affect you, okay? So if you don't pay for 6 months, okay, let's say your mortgage payment was $1,500. So if you don't pay for 6 months, you come up with an agreement with your lender. After the 6 months, you probably will get a bump up in your payment to recoup. So your bump up might be 2250 as a mortgage payment. Okay, now you're going to be charged that until you're caught up. So let's call that another 12-month period to get caught up. I didn't do the math, but let's just hypothetically say that. So here's how it could affect you, because one rule in lending sometimes is that you cannot get another loan unless you've been current on your mortgage for a year. So you get a forbearance for 6 months, okay? You may not be, you may be marked as late or not current. Now you take that 6 months and you project that out where you have all your caught up payments, where the payments are higher. So let's call that another year. Now you're not caught up until the end of that year. Now, by the rule currently, you can't get another loan for another 12 months, according to some lending standards. So that may affect your ability to borrow again for, according to that math, it would be 2.5 years. So that's quite a long time. That's something that it could affect you. So don't be quick. The moral of the video is don't be quick to take these provisions unless you know all the ramifications or unless you absolutely need to. Now, a better idea could be to refinance the house. Or interest rates are really low, and to refi the house, as long as you don't increase the balance of the loan, you're just taking advantage of a better rate, then a lot of times the banks won't even need to do an appraisal. They'll just recast that loan. And the easiest conversation to have is with your current lender. So you can make that call to your current lender, see if they can just do like a desktop appraisal, something quick and easy like that, or maybe not an appraisal at all because you're not changing your loan balance. So that's a conversation you could have too. Could be an alternative to doing the forbearance. Doesn't keep you from paying your mortgage payment, but it may lower it. So I just wanted to throw that quick information out there about forbearance. Don't be so quick. And if you have any other questions or you want to ask me any questions, of course, I'm always here. All right. Thanks and have a great one.